Larry Shover, Chief Investment Officer at SFG Alternatives, live in Chicago. Larry, good to have you with us today. Your view, your sort of stance as we look at it on the oil side of things, because obviously geopolitical risk, certainly one to be watching on the supply disruption side of things. Will that continue to impact the oil price, and do you expect it to sort of continue moving up from here?
Yeah, my projection on oil is the same as it's been at the beginning of the year. I continue to be bearish on it. We all focus on supply, and it is true. There's been some big obstacles to overcome with the supply issue. Not many people focus on demand. I do, and I realize that the demand has been very robust, but it's not matching what it was even at the end of 2017, and I do think that we're closer to an end of a cycle than the beginning of a cycle. I don't think global crude can grow at 1.5% a year when the 10-year average is closer to 1%. So I'm still thinking that we have a little bit more to go down in the price. It might not happen overnight, given the political strife and the supply logistics, et cetera, but I still am very comfortable with my call.
We saw that weaker than expected data coming out from China yesterday, that triple whammy of retail sales, industrial production, fixed asset investment. And you just wonder how much that's played into the commodities picture, because obviously there's lots of factors sort of impacting oil at the moment. But outside of that, base metals in particular, we were just seeing copper a little weaker. Would you expect that to have impacted commodities?
Yeah, well, I think what we're seeing is, China started a deleveraging effort in 2017, and we're just starting to see the effects of some of that. And we know that that's a moving target. It's affecting the shadow banking. It's affecting the banks themselves with regulations. Even though the stock market, the Chinese Shanghai stock market's down 22%, you look